Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 3SBIO interim report. The businesses and services provided by 3SBIO Inc. include biopharmaceutical products such as TPIAO, Cipterbin, Yisepu, EPIAO, SCPO, Mendiminoxidil, SBARIN, Remich, MN709 trading of various products, research and development of biotechnology and drugs, sales of chemical products, retail of pharmaceuticals, project management and consultation services, technology services, sports services, financial services, clinic services, investment advisory services, agricultural services, manufacture of medical devices. The skyrocketing stock price of 3SBIO, a year of breakthroughs and partnerships in the past year, 3SBIO stock has experienced a remarkable surge of over 340% in value. The key driver behind this significant increase is the company's strategic partnership with Pfizer Inc., announced on May 20, 2025. This exclusive global licensing deal for the cancer drug candidate SSG-707 has the potential to be worth up to $6 billion, comprising an upfront payment of $1.25 billion and milestone payments of up to $4.8 billion. The partnership with Pfizer not only brought in a substantial upfront payment, but also a $100 million equity investment from the pharmaceutical giant. This deal was met with immediate enthusiasm from investors, resulting in a 36% gain in 3SBIO shares in Hong Kong. Analysts were equally optimistic, with CLSA raising its price target for 3SBIO stock and maintaining an outperform rating. Beyond the Pfizer partnership, 3SBIO has continued to demonstrate strong financial performance, with a 24.6% year-on-year increase in net profit attributable to shareholders for the first half of 2025. Positive analyst outlooks have also contributed to investor confidence, with firms like CICC raising 3SBIO's target price to $36.50. The combination of these factors has created a perfect storm that has propelled 3SBIO's stock price to unprecedented heights. As the company continues to innovate and expand its product pipeline, investors remain optimistic about its future prospects. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. 1. Market share growth in thrombocytopenia treatment, particularly in mainland China. 2. Commercialization rights and breakthrough therapy designation for new products. 3. Upfront payments from major pharmaceutical companies like Pfizer Inc. 4. Expansion of indications for existing products and listing on the National Reimbursement Drug List, NRDL. 5. Market growth in key third and fourth tier cities. Revenue decline drivers. 1. Decrease in sales volume for specific products, including TPIAO, EPIAO, and SCPO. 2. Declines in both sales price and sales volume for certain products. 3. Specific product declines due to various reasons. Overall, the company's revenue growth is driven by its expanding market share, new product launches, and partnerships with major pharmaceutical companies. However, specific product declines and decreases in sales volume have contributed to revenue decline. Net income and profit margins. A contradictory trend. The financial summary reveals a contradictory trend in net income and profit margins for the company. On one hand, net income increased by RMB 168.3 million or 24.6% to RMB 1,358.2 million, page 7. However, this increase is disputed by another summary on page 22, which states that net income actually decreased by RMB 81.6 million, or 2.1%. This discrepancy highlights the complexity of the company's financial performance. Furthermore, profit margins also experienced a decline. The gross profit margin decreased from 86.5% to 85.3%, page 7 and page 22. This decrease in profit margins suggests that the company may be struggling to maintain its pricing power or is facing increased competition. The contradictory trend in net income and the decline in profit margins raise concerns about the company's financial health and sustainability. The company is generating a significant positive operating cash flow. For the 6 months ended June 30, 2025, it reported a net cash inflow of approximately RMB 969.6 million. This indicates that the company's operations are producing more than enough cash to cover its expenses and investments, resulting in a substantial surplus. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there has been a substantial decrease. The interest-bearing bank borrowings dropped by RMB 444.8 million from RMB 281.4 million to RMB 836.6 million. Furthermore, the total debt decreased by RMB 445 million, 976,000 from RMB 243 million, 750,000 to RMB 798 million, 774,000. This indicates a significant reduction in the company's debt burden. Regarding interest expenses, there has been a notable decrease of 49.2% in finance costs from RMB 104.4 million to RMB 53 million. Additionally, the interest on bank borrowings decreased by RMB 49,837 from RMB 77,661 in 2024 to RMB 27,824 in 2025. Overall, these changes suggest that the company has made efforts to reduce its debt level and associated interest expenses, indicating a more stable financial position. Management's outlook and strategy. The company has a promising outlook with ongoing registration in several countries and consistent market leadership in mainland China. To enhance competitiveness, management plans to expand the product portfolio through cooperation with Duality Biologics. Additionally, they aim to improve return on equity and assets by funding working capital and other capital requirements from various sources. Management estimates total capital expenditure over the next 3 years to range from RMB 800 million to RMB 1,000 million for facility maintenance and production expansion. This investment is expected to support the company's growth and enhance awareness of its products in the medical profession. The company has a history of paying dividends to its shareholders. In 2024, it was reported that the company had paid dividends, page 82. Furthermore, a proposed dividend for the year ended December 31, 2024, was also mentioned, page 55. Additionally, in 2025, the company continued this trend by paying dividends again, page 62. That concludes the financial summary for 3SBIO. Feel free to comment below, and I will be happy to answer them when possible.